Welcome to this explainer. Look, today we're going to completely flip the script on how you tackle the financial markets. If you've been feeling stuck in a rut lately, well, it's time for a major shift. We are going to take that mindset of a gambler chasing the next quick thrill and transform it into the mindset of a professional business owner who executes a measurable, highly structured process.
Let's kick things off with a brutally honest question, and I really want you to think about this for a second. Can you explain exactly why you lost money 3 weeks ago? Do you know the precise market condition, the specific emotional trigger, or the exact rule you broke? Or are you kind of just repeating the exact same mistakes over and over, completely blind to the cycle?
As outlined in our source material, The Trading Journal, let's get one thing straight. Long-term success in the markets doesn't come from discovering some secret sauce indicator or a magical holy grail trading system. Nope. It comes from meticulous record-keeping. Studies consistently show that retail traders who actively journal their setups are significantly more likely to actually survive their first year in the markets. I mean, think about it. Professional athletes obsessively watch their game tape, right? Pilots log every single flight. Business owners track every dime of revenue. Keeping a journal takes trading from a total guessing game and turns it into a measurable, improvable skill.
All right, so here is our quick roadmap for today's explainer. First, we'll hit the trader's blind spot. Second, the anatomy of a trading journal. Third, what you must record. Fourth, finding the hidden patterns. And finally, building the journaling habit.
Okay, Section 1, the trader's blind spot. Driving without a map. Let's confront a highly relatable pain point here. Trading completely blind.
So here's the thing about human memory. It is incredibly flawed. We're practically hardwired to selectively recall our thrilling victories. You know, those massive, exciting trades where we felt like absolute geniuses. But our brains, they conveniently bury the destructive, repeating errors that quietly bleed our accounts dry. If you're just relying on your memory, you're working with a wildly distorted picture of your actual performance.
And without a journal to keep us grounded, guess who takes the wheel? Emotion. Overconfidence runs the show, and fear and greed just completely take over. That leads right into destructive behaviors like revenge trading. You take a really painful loss, you get incredibly frustrated, and bam, you immediately open an impulsive trade just to win that money back. Logic goes completely out the window. And without a written record, this toxic cycle can literally run for years without you even realizing it's your biggest leak.
Now, a lot of beginners mix up their broker's trade history with a real trading journal. But let's be real, your broker just gives you the receipt. It only tells you the what asset you bought, your entry, and the final profit or loss. A proper trading journal tells you the absolutely vital story of why it happened. It captures your overall strategy, your emotional state, and, most importantly, whether you actually stuck to your rules.
Moving right along to Section 2, Anatomy of a Trading Journal, your personal mirror.
Seriously, think of your journal as an uncompromising mirror. You might walk around believing you're a highly patient, disciplined trader who manages risk perfectly. But this mirror, it cuts right through that overconfidence. It strips away all the opinions and excuses and replaces them with cold, hard, undeniable evidence. You simply can't argue with your own data.
Let's dive into Section 3, what you must record. The 3 pillars of data.
Staring at a blank page is super intimidating, so we're going to chop your journal into 3 very clear pillars. Pillar 1 is all about the objective facts, the raw numbers that tell you exactly what went down. What was the exact date? Which specific asset did you trade? What were your exact entry and exit prices? And crucially, what was your position size, your committed capital, and the final P&L? This is your foundational data. Then we have Pillar 2, which is documenting your logic. This is where you write down the strategy you used. Was it a breakout, a pullback? What was the broader market doing, uptrend or downtrend? What was the exact reason you clicked buy? You also absolutely must record your stop loss and take profit levels to see your risk-to-reward ratio. Basically, this tells you if you actually followed a logical plan or if you were, well, just guessing.
And then Pillar 3. Honestly, this is the one most beginners completely ignore, but it's where the real magic happens, your emotional notes. Tracking your psychological state before, during, and after a trade reveals the hidden destructive habits holding you back. Did pure fear make you close a massive winner too early? Did sheer boredom push you into a garbage setup? Pinning this down gives you tremendous power over your impulses.
Oh, and absolutely do not forget the visuals. A picture is literally worth pages and pages of notes. Always grab a screenshot of your charts right before you enter and right after you exit. Months later, when you're doing a deep dive on your data, that visual evidence instantly brings back the specific market context that plain text just can't capture.
Which brings us to Section 4, finding the hidden patterns, turning data into insight.
Because look, a journal is 100% useless if it just sits there collecting dust. When you actually sit down and review the data, the insights can literally slap you in the face. Consider this breakdown. If your journal shows you're hitting a 70% win rate on breakouts, but a really brutal 35% win rate on reversals, well, the fix is obvious, right? Stop trading reversals. Focus entirely on your strengths. You just can't get that kind of clarity without keeping score.
Reviewing your entries is also going to relentlessly expose your hidden bad habits. You'll start to catch things like chasing trades way after the move already happened, or nudging your stop loss further away mid-trade because you just couldn't swallow a small loss, or overtrading just because you were bored. The beauty is, once a problem becomes visible in ink, it becomes actionable. You can finally make hard rules to fix it.
Finally, let's look at Section 5, building the journaling habit, the professional routine.
So how do we actually make this stick? The trick is not to overwhelm yourself. Keep it simple. Break it down into a super easy before, during, and after routine, and the whole thing becomes totally manageable. Before you enter, jot down your plan. During the trade, quickly check your emotional state. And after you exit, log the result and the one core lesson you learned. Boom! Takes less than 5 minutes.
And hey, please hear me on this. Start small. You do not need some insane, highly engineered spreadsheet with 50 columns. A basic dollar store notebook or a super simple Excel sheet that you use consistently is a million times better than a complex system you completely abandon by next Tuesday. And if you miss a day, don't sweat it. Missing a day isn't failure. Just pick up the pen again tomorrow. Consistency beats perfection every single time.
The real payoff, the whole shebang, comes when you actually schedule your reviews. Block out 30 minutes for a weekly check-in and then a deeper dive at the end of the month. That is the secret mechanism that takes all this raw, messy data and transforms it into your personalized trading playbook. It's exactly how you start operating like a top-tier fund manager.
Always keep this profound little truth in the back of your mind. It echoes across professional trading floors for a reason. What gets measured gets improved. It's absolutely crucial. You cannot fix what you don't accurately track. Every single entry in your journal compounds over time, building this massive archive of personal experience that gives you a crazy competitive edge.
Ultimately, your trading journal is your roadmap. It's your ultimate personal teacher, showing you the exact steps to level up day by day. So I'm going to leave you with this one provocative question. Are you going to keep treating the market like a scratch-off lottery ticket, just crossing your fingers and hoping for the best? Or are you finally ready to treat it like a measurable skill and meet the real trader in the mirror? Start journaling today.